You've just had $21 billion deal announced with Meta yesterday. You have Anthropic today, Michael. What does this mean for your investors in terms of the clarity of revenue growth going forward?
Yeah, first of all, good afternoon. Thank you for having me. But it has been a unique couple of weeks for us here, because not only have we really made tremendous progress with the likes of Meta and Anthropic, but we've also had tremendous overwhelming success in the capital markets as we continue to build the funding mechanisms to be able to ensure that we are able to execute on our roadmap for growth.
Let's talk about those funding mechanisms, because you're looking at unique ways to be able to get access to credit lines by using basically the power of your customer, the fact that Meta is the one that's coming to you for the compute and the strength there. You're also tapping, though, well, convertible notes was what was issued yesterday, as well as bonds. We're seeking billions of that. How much more debt are you going to have to take on to fuel the growth?
So, we've been very creative about how we kind of look at the capital markets, making sure that we can execute on our plan in the most cost-effective way. And so, we issued $8.5 billion worth of bonds at A- paper because of the quality of our counterparties, and that was a tremendous reduction in our weighted average cost of capital. And then we came back yesterday. We did the largest dual offering ever. And that was both the convertible note that we issued, as well as a tranche of high yield, really positioning us well for the capital requirements. And it's just the oversubscription to these tools that we're bringing into market, to the paper that we're bringing to market, really provides tremendous transparency to us, to our investors, to our clients, about how much access we are going to be given to capital as we continue to execute on this strategy. And people are really confident. The cost of capital keeps coming down in our ability to kind of drive the compute that is so dear to all of these model creators and product people who are producing product for artificial intelligence. It's just been an extraordinary week, both on the capital raise side as well as the client contract side.
As the cost of capital comes down, you get to tap more. How much more money do you need to get from the debt markets, Michael?
Yeah, so look, our strategy continues to be success driven, right? And so we go out and we execute a contract like the one we just did with Meta. And now with that contract in hand, we will go into the capital markets and we will raise debt that will be at a very low cost of capital to be able to build the infrastructure to deliver on that contract. Each of our contracts are profitable and drive wonderful return. And at the parent co, we're just looking to continue to scale into this, unique opportunity to kind of build, an enormous company that is instrumental in delivering infrastructure to the world.
How much does Anthropic need?
So we're not at liberty to speak to the size of that contract. It is a multi-billion-dollar contract, but really much more importantly than that, from our perspective, this is the first contract that we've executed with them. It's the first time that they've used somebody out of one of their core investors, and they came to us because of the quality of the infrastructure and the software solutions that we provide. And so, we just think it's an incredible vote of confidence from one of the most important labs in the world. And we think that it's going to be a launch pad for additional business between us and them, just as every other client that we've brought on. Really, all the major clients, they come on, they do a contract with us, and it's a land and expand strategy for both parties. We really build from that into a very broad-based relationship where we become an integral part of their infrastructure strategy.
Let's talk about Mythos. Does the slow unveil of the model to unique partners, does that signal an issue with compute?
So look, the strategy that Anthropic is using to, as they kind of bring their products to market is really, it's their strategy. Our job in this ecosystem is to provide as much infrastructure at the highest quality that we can, right? And they came to us, they engaged us because they have demand for compute because of the wonderful products that they are bringing to market, and that's being echoed across the different labs, universally. And our role in this is really to go ahead and to deliver the infrastructure that these companies are going to need and currently need to be able to successfully deliver their product to market. That's what our role is. We do.
Michael, I'm fascinated by the global perspective you have here, because the geopolitical environment that we live in at the moment means that energy prices are driving up, particularly over in Europe and the UK. OpenAI, we have reporting that they're pulling back on their Stargate project in the UK because energy is getting too expensive. And yet they're going out to their investors and saying, look, we're ahead of the game, we're ahead of Anthropic because of our compute that we have. What are you seeing in terms of people trying to rearrange where their compute is accessed from?
Yeah, look, the way I kind of view it, and my background really is within the commodity space, is that people are going to be very thoughtful about managing the cost of delivering infrastructure. And some of that is going to come from the energy side. It's going to be, hey, where can we get electrons that are effectively priced so that we can continue to drive our company? But it's also going to come from places like CoreWeave, where our software and the yield on the compute that we build is just higher than other alternatives because of the quality of the software environment that we build. And so you're seeing both sides of that coin really being driven, and you're seeing the success of our infrastructure and the adoption of our infrastructure because of the part that we can impact. And so we look at the different energy markets. We place our infrastructure in lots of different places in order to mitigate localized risks, such as what's happening in Europe at the moment. But we really do think that the part that we can directly control is the quality of the infrastructure we deliver.
Would you pull back from the UK, Michael?
No, we have no intention of pulling back from the UK. We are well positioned there. We have a great relationship with the energy companies, with the data centers, and with the broader economy over there. And we absolutely will continue to build and expand our footprint in those jurisdictions.